Welcome to another episode of what we're in the office affectionately calling Ask Adam. I don't know if it's an official name yet, but we're working that out. Adam Udy, certified financial planner and founder of Adam Udy Group. Thanks for joining us.
Thank you, Chisum.
All right.
You do a great job at getting us started. I appreciate it.
Thank you. I appreciate that. Today, we're going to talk about something that we've had multiple conversations with over the last year or so, more so than ever, because it feels like gold and precious metals are having a moment, right? And it seems to be in the news more often than it has been and on clients' mind more often than it has been. So we're going to talk a little bit about why one may want to own gold, what maybe some of the advantages and disadvantages are, and how it works to put precious metals into a portfolio.
Absolutely.
So let's just start there. Why would someone want to own gold, aside from the fact that it's shiny and looks pretty?
Yeah. Well, there's different aspects with owning precious metals in a portfolio. For some people, it is a cultural thing. For some people, it is a safety thing. Like when you think about, like, hey, if the world comes to an end, what are some of the things that are always going to be there? And people tend to go, well, gold and silver will always remain some sort of store of value. That said, besides safety and cultural affinity towards precious metals, there's also the safe haven during difficult times. So when there's war and chaos or major issues and turmoil in the world, people tend to run towards safe assets such as precious metals and or treasuries during those times. And it is an inflation hedge. I mean, when you look at it long term, it is something that can keep up with inflation versus cash, money in the bank or under a mattress isn't going to keep up with inflation over time.
Sure. It feels like that may be the primary motivator or the primary advantage when you look at it from at least a financial standpoint. It does hold up. It is a hedge against inflation, right? The ultimate hedge against inflation.
Sure.
And kind of a flight to safety when there is chaos and uncertainty in the market. I remember, and you and I were both in the business during 9/11, and that was certainly an unprecedented time. Back, in the 90s and early 2000s, gold really hadn't performed very well at all, right? And it was kind of a neglected asset in a lot of portfolios. And then after 9/11, you saw a large pop. And that kind of flight to safety, and it reminded people of maybe why it's not a bad idea to own a little bit. So when you're looking at adding gold to a portfolio or precious metals, I'm using gold, but it can be other metals as well. What percentages are you looking at, and how do you like to manage precious metals within a portfolio?
Sure. I would say, for some people, there's an exception, or maybe they have a very high comfort level and affinity for gold, and we may do a higher allocation. But typically, it's anywhere between 3 and 10%. It's a relatively small part of the portfolio, but right now it's working well. And over the years with these tracking ETFs that track the price of precious metals, it's really easy to be able to include that in a traditional investment portfolio, and it could be lowered in weighting later. But right now, most people seem to have a higher allocation to it than normal. But I think it's also important to understand like the downsides and have the right expectations for for gold or for silver or any other precious metal.
Sure. So that kind of leads to the next question. It's not all upside, right? It's not all roses. So what are some of the downsides to precious metals or gold specifically in a portfolio?
Yeah, some of the biggest ones. I mean, for some people, they want to own it in physical form at their home, and that creates some security concerns. But let's just say that you have it in an ETF form and you have it in portfolio. Some of the other concerns, no matter which way you own it, is that there may be long periods of time throughout history where precious metals have not done well, where it may be there hasn't been a lot of times in financial markets, like with stock market or real estate, where you lose a decade or 20 years of not being able to get any kind of a return. And it has happened in precious metals more than once, where you could buy it and then 10 years later, maybe just get to break even. And all along the way, which brings up the point of one of the other downsides is that there's no income generated from that portfolio. So it's not like you're getting a dividend or a cash flow along the way. And it's so it's unpredictable. You may go through long time periods of underperformance and may not recover your value. And it is still volatile, just like any other asset class. It's subject to various supply demands, supply demand changes that may push the price down. Just because gold has done really well the past decade doesn't mean it's going to do well the next decade.
Sure. Some of the most well-known investors out there, Warren Buffett, Bogle. I think Warren Buffett has been credited with saying if you own an ounce of gold for eternity, at the end you still end up with an ounce of gold, right? There's no that. And his point is he would rather own a farm or an actual business that has a profit generating motive, that there's an engine that's driving value every single year,
right?
And you're not just relying on buying something and with the hopes of selling it to somebody else in the future for a greater amount. And so that certainly is. What about, and you touched on this a little bit for home storage, but also whether you're keeping the precious metals yourself or having a bank do it, there's a cost involved in that, right?
Yeah, no matter what, there's like if you store it in a vault, there's costs for that, for safekeeping. There's transaction costs. But if you have it in a portfolio, which I do believe is pretty efficient, you're looking at a fraction of 1% per year to have that put together in an ETF form, and that's a fairly common, fairly efficient way to own gold in an investment portfolio. And I wanted to mention as well that you typically, when you buy an asset like stocks or real estate or even bonds, if you make money on that and you sell it after a year, you get long-term capital gains. Whereas with precious metals, it's viewed differently with the IRS, where it's considered a collectible. No matter how long you've held it, there's a higher tax rate. It's around 28% currently.
Sure, versus the 20% for we're talking current rates. Of course, all of that is subject to change, but current long-term capital gains rate being 20% versus 28%. So I think that's a great point, because a lot of people don't realize that gold and precious metals are going to be taxed differently than other financial assets. And often that's an overlooked aspect. That's something that either people don't know about or they just think that's a problem for a later date. And really, it's something that you should consider before you
absolutely
even enter into it.
Something to be aware of. I think many people out there have different buckets of money, and when we're thinking about owning precious metals, one of the more logical places to own it is within a retirement account, just so that you get that tax deferral and the wrapper around that. So when it's sold, you're just taking a retirement account withdrawal and not having to worry about the tax per se.
Yeah, perfect. So if it's in a taxable account, whether you're owning it physically or you're owning it in ETF form, you are going to be subject to that higher capital gains rate.
Yep.
But if we're owning it in a retirement plan, which you're able to do, and then you don't have to worry about that additional tax. That's an excellent way to kind of not have to worry about that additional tax hit. That's almost 10% and pretty significant.
Yeah.
So would you say that everyone should own gold, or it's a case by case basis?
I don't know that there's a blanket rule. When I think about gold as a long-term investment, it doesn't, and when we're talking about long-term, I mean like the last 50 or 100 years, I don't see gold as the best way to get capital appreciation and growth. So if you're a young person, and you want to be all in on growth assets, I don't see that being the most logical growth vehicle. But I do think gold can be a good trade or a good hedge at times. And when you're looking at maybe a more moderate, diversified investor and you want money in different asset classes, I think gold can be a great complement to the overall portfolio. So in general, I think gold can always have a place in a portfolio, but it doesn't necessarily need to be a place for a high growth portfolio for the long run.
Sure. I think that's a great perspective. It's much like the answer in life and in our business in general. The answer is it depends, right? It depends on your individual situation, your outlook, and whether or not you value the positives over the negatives of that particular asset class, right?
Absolutely.
So if someone hasn't had a position in gold in their portfolio or precious metals in their portfolio, right now, as we've said, that gold has kind of been having a moment here recently. Mm-hmm. And what is the current price of gold? And is it too late to add that to your portfolio? Have we missed the boat?
Well, it's right now gold is about $4,600 an ounce, and approximately. And I would have thought when gold was $2,000 or $1,000, I wouldn't have guessed that it would have done this well over this period of time. However, I do think that there's a case to be made that it will do well. Maybe not as well as it has done, but it could continue to do well with the fact that we have. As a country, we continue to print money. We continue to put money out in the system, which can cause gold to continue to do well. And with that being said, I mean there's some major firms like J.P. Morgan out there that their outlook for gold over the next decade is around 5.5-6%. So. And it is a diversifier. So what I would caution if you are buying gold today is that we may be buying it towards the top of a cycle to where you could potentially be buying this and not actually making money on it for quite some time. And I think that is part of the expectations that is healthy around gold, is that there's long periods of time where it doesn't do well, and we may enter one of those here pretty soon.
Sure, like any asset, it's important to realize that it doesn't only go up, right? There's another direction, and you have to be prepared for that. And and as we've talked about, the downside is, unlike maybe a stock that might pay a dividend, even if the stock is down, you're not generating any cash while you hold that asset, if we're talking about precious metals.
Correct.
Excellent. All right. Well, thank you for that perspective. And if you have any questions, certainly give Adam a call, and happy to have that discussion.
Thank you. Or give you a call.
Or, yeah, me too. Sure. Give us a call.
Good.
All
well, just to summarize, there's a few things that investors need to keep in mind when owning gold inside their portfolio is that, one is that it is a diversifier, and it tends to do well during difficult times of chaos and uncertainty in the world. However, it has, throughout history, there's been long periods of time, decades, 20 years, 30 years, where gold hasn't done well. And you do pay potentially a higher tax rate on when you sell gold outside of a retirement account. So I think if we keep those basics in mind, and just view it as a diversifier in a portfolio and an inflation hedge, but have those issues in mind, then I think we're going in with the right expectations.